Welcome to Primary Source China Investment. We're back with another episode. We've got a lot of ground to cover, so why don't we just get right into it? Peng.guo is here. Hopefully, we'll have a spirited discussion about a number of the topics that are on the table. And the first up is China policy. So back in October, the government had a pre-meeting where they telegraphed where we are, where we want to be, how do we get there kind of thing. A lot of environmental stuff was on the agenda. And then just this week, we had the formal meeting. And is there anything that came out of that that would help us determine where we're going forward, what specific actions we can take?
China policy is very important to the whole country. I think we first need to understand what's the goal of the government is to keep a stable business and economic environment. So this stable environment is very important to do business and to keep the political environment, to keep the entire country stable. I think also we need to understand what's the sectors for the China policy. So the most important affected sector is could be still the consumer sectors as well as the medical sector. Right now, the policy move from the top tier cities to the tier 3 and the tier 4 cities as well as countries. So that is a big change in China right now.
So in the notes to the meeting, I heard two specific areas that I want to comment that I'd like you to get your comments on. The first is this concept of ESG and the reduction of its emissions intensity was the translation. So that's the first area, which is the environmental or ESG, whatever you want to call it. And the second is this self-reliance on science and technology. Some specific things that I heard was R&D spending to increase 7% annually on science and technology. Patents, they were looking for the doubling of patents, so-called high-value patents. And the third was this contribution of GDP from 7.8 to 10%. And on a GDP of 14 trillion US dollar, I mean, 2%, that's what, 280 billion.
ESG is very, very hot topic. I think that is probably the same in the capital market as well as in the government policy for this year. So people need to understand that. So the ESG is in China is really focused on the carbon oxide emission. They have the details to move to reach the goal. So they, for the individual enterprise, as well as for the province, for the city, they all have the details and go to allocate. So the ESG is also the hot topic in the financial market.
Well, I do think they've also mentioned that they'd meet they had a target, I think was net zero emissions by 2060 and ensuring the carbon dioxide output peaks before 2030.
Exactly. I think at the corporate level, it's very hot. And right now, the local government started to provide the training to the corporate, teach them how to do it, how to manage it, probably how to trade their quote in the market.
Okay, so that feels like a good point to move on to capital markets. So why don't we think about
Sure.
how this is going to impact capital markets and some other areas that we have on our agenda to discuss. Despite the CSI 300 being down from a recent high, I guess it was on February 10th, there's a lot of China bulls. But one of the things that I wanted to talk about today was what's in this CSI 300, because like all indexes, it changes over time. And specifically, the CSI 300 has seen massive change. And I just pulled up a chart from a presentation I did many years ago, and the top 10 holdings of the CSI 300 then versus today. And I think a lot of our viewers would be surprised to find out 8% of the CSI 300 is Baijiu. So if you want to invest in the CSI 300, you better like Baijiu. It's not Tencent. Tencent's not in the CSI 300. So these are the kind of issues that foreign investors looking into China are thinking about. What am I getting when I'm buying these things?
I think CSI 300, I was just want to mention, is different from the US market. Is CSI 300 is one of the three index that have the future. So that really means the CSI 300 can be hedged in the future market. So this is a very unique area. That's a trigger probably, especially in the downside. Most of the people try to hedge the downside of the equity market. They have only one tool to hedge. That's the crowd and of course the crash of the CSI 300, and as obviously increase the volatility for this index.
Right. So you mentioned the sectors, and I really wanted to point that out because I have March 2014 for these sectors, and we'll put a screen up, but at that time, financials dominated the CSI 300, and a lot of those huge financial service companies, those big banks, the ICBC, the CCB, Bank of China, those were the big names in the index. That was almost 50% of the index, and now it's about 29% of the index. So there's a huge downshift away from financials, and that's just because other things have grown. So what has taken its place is consumer staples, like you mentioned earlier, and technology. And I think technology is a little bit misunderstood right now about what's in China, what's not in China, because so many of these names don't trade in China. So many of the big brand names, leading name companies don't trade on the A share. They trade in either Hong Kong or they trade in the US.
That's right. I think firstly, for the especially for the last year and recently, sector, the correlation between the sector as well as the entire stock market really changed. So they used to be like have the high correlation and all the sectors go with the market, but right now it's totally changed. So you will see like sometimes the market get volatility, but for the one sector or consumer staple sector is quite stable up there.
You talked about volatility, so I just want to understand. You first described the futures market as a reason for some volatility in the CSI 300, and how does that play out on a sector level?
The sector level, I think most people or like the bigger institution, they don't have the good tool to hedge it. So whatever they can do, no matter which sector they do it, if they get a large capital, they probably choose CSI 300 to hedge it.
I see. So even if they have whatever exposure they have, they're going to use the futures contract CSI 300 to hedge that position.
That's right. They get no choice. Or the CSI 500. That's only two tools. Yeah.
Right. Right. Well, I think we spent enough time on the CSI 300 today, but there's just so much nuance in the equity market that we're going to get to over time. It's just a little bit short today. So with that, we'll turn it on over to Chalk Talk. So as mentioned, the next section is Chalk Talk, where we break down something that's very specific to the China market. And what we wanted to talk about today is the actual size of the China market. More and more investors are looking at China as its own asset class. And I think that's the smart thing to do, because so much size, just in terms of GDP, just in terms of the Shanghai, Shenzhen Stock Exchange, and if you add in Hong Kong, the size of the market requires its own investment thesis.
I agree with you. So in my opinion, you have to be very, very clear about the characteristics of the market.
Right. I think the other thing that prevented a lot of investors from buying A shares specifically was these barriers. You had this Q fee quota and RQ fee, and you had the stock connect, and now all of those things have theoretically or practically been harmonized. And investors have a lot of options now to invest directly into the mainland. And if you just look at the size, northbound Stock Connect, that's about 140 billion Hong Kong dollars every day.
And China is really like the broader concept in the capital market. So it has Asia, HL, and overseas China stocks. While you do the consider investment, I think probably the best way is still think about it from the sector level or from the theme level to get the exposure, rather than generally get the purchase like the Asia or China related stock, because you might not get the right exposure.
A lot of institutions, when they say, oh, I want to invest in China, they think they're getting those high-flying names. They think they're getting Tencent, Alibaba, Baidu, and they're not if they're investing on the mainland. So there is some nuance into how to get the exposure that you want. And then the final point I wanted to make here is just size. We talk about the stock market a lot, but the China bond market is something that I've been very passionate about for a long, long time. I've encouraged people to get educated and invest on the China fixed income market. It is now the second or third largest, depending how you measure, market, fixed income market. It's 90 trillion renminbi or 15 trillion US dollar. There are very few places that have highly rated positive yield, and China fixed income is one of them. That being said, you really have to understand on the ground what risks you're taking. You know, you're hearing coal companies that are missing payments. You're hearing about entities that are actually going bankrupt, which is actually a good thing for the fixed income market.
That's right. I think, firstly, we still back to the China policy. The China government goal is to really build the capital market to allow the corporate, they can cash in their values they build it over the years in the capital market.
So do you think there's an opportunity for what we'll call return home listing? Do you think that Alibaba will list on the mainland?
I think that is the trend, especially for this year. So we get Bilibili will return right away, probably in the early of the April. They will get listed in Hong Kong market. The reason is it's quite clear from even from the U.S. research, whatever they get a higher value in home country.
Okay, so our final section is forward-looking, and we're going to get to that. Forward-looking and what's on the calendar, what's coming up. And I think the biggest number that's coming up is this China trade surplus. Sometime in the coming week, they're going to print after what was an all-time high in December, which was the 78.17 billion. So that was a massive number. And, you know, the questions are going to come about what's the trade policy, you know, from the US. I think people have to remember that there's been a shift where, you know, Europe is the largest trading countries or regions with China, no longer the US. So I think the biggest number looking forward is this trade surplus number. A little backward looking was the manufacturing number. China posted a weak number, still showing expansion, but PMI dipped from 51.3 to 50.6. And, you know, traditionally people blame, oh, it's Chinese New Year and people slow down, but every year is Chinese New Year. So it's not a surprise. So this is the third month in a row that they showed a declining number. Still expansionary, but still declining, and something to look out for.
I think right now is really the topic in the short term. It's still recover from the pandemic. So after I think after the vaccine get popular used in the developed countries, the economy get recovered. And hopefully we can get a recover probably in the summertime or maybe in fall sometime. I believe China trade surplus probably won't be dropped. It may or may not get increased, but I think it should keep relatively stable because in the end of the last year, as well as in the early of this year, Bezos already explored a lot of the products.
One thing that came up in the 5-year plan was this idea of this dual core, which means creating opportunities for Chinese companies abroad, increasing demand for Chinese-made products domestically, and although it's dual core, it's the third thing is decreasing the relative competitiveness of foreign products in China.
Dual core, I think, probably could happen in China, United States, or major countries in the world, because really each country, they have to at least get some bottom, the key industry, and they will support the local production. That is a pretty natural way for each country to do it. I think probably that may or may not affect the international relationship. It depends on what kind of the sector or what kind of the competition advantage. I believe the overall, most of the country will adjust their the supply chain or their entire production just to make them feel comfortable. I think in the whole world, they still get highly connected to each other.
Right. Well, there's a lot to look forward to. So with that, we're going to wrap it up for this week, and we'll see you next week on Primary Source China Investment. Thanks. Good to see you.
Thank you.
Bye-bye.
Thank you. Bye.